Hey everybody, Smart Silver Stacker here. Hope you're doing well. So the gold price and the silver price have come under some pressure today following the release of July's inflation data. So should stackers be worried here? Well, we'll delve into that. We'll talk about what is driving this sell-off in the gold price and in the silver price. And then we'll zoom out, take a look at some of the big picture stuff and see maybe where the metals are set up to head from here. But first of all, let's just take a look at this chart of gold. You can see we had the inflation data released at 8:30 a.m. this morning, and gold just sold off sharply following that. Now, to say sharply is maybe a little bit of an exaggeration. It's down 24 bucks at the moment on a percentage basis because gold price has gotten so high. Might not seem like that much of a sell-off, but I think today was a day when we were kind of anticipating maybe a move higher on the release of this data. In silver, kind of a similar story. We saw a sell-off following the release of the data, although with silver, there's been a bit more of a recovery off the lows of the day. Right now, silver down about 0.9%. Now, if you're like me, you like to perhaps actually take advantage of these declines in the price of gold and silver, do some stacking on a day like this. If you are a new stacker, make sure you check out SD Bullion. Right now, new customers can get gold or silver at spot price by visiting sdbullion.com/new. So here's the inflation report from the BLS. We had the CPI for July increase 0.2% on a seasonally adjusted basis. That was following a 0.1% decline in June. Year over year, the CPI is up 2.9%. The core CPI is up 3.2%. That is excluding food and energy. Now, this was more or less in line with expectations. The story here from the mainstream is that this is a soft inflation print. It's a cooling inflation print. Now, to be fair, the core CPI, this was the smallest 12-month increase in the core CPI since April of 2021, but still a 3.2% increase year over year is not small potatoes, especially when you consider that this is on the back of all the inflation that we've experienced thus far. It's cumulative. And also, the CPI numbers, you got to take them with a grain of salt, but they are important because the Fed is data driven, according to them. That's what they tell us, and this is the data that they look at. So this is still an important piece of information to examine. Now, one of the reasons I think that we're seeing perhaps some weakness on this inflation print, it's not just in metals. The markets are kind of a mixed bag, but NASDAQ's down, the Russell 2000 is down, crude oil is down today as well. S&P 500 and the Dow slightly in the green, but they're off the highs of the day as well, is because of this shelter component of the CPI. So the shelter component of the CPI actually contributed to 90% of the monthly increase in inflation in July. And rent increased 0.5% on a monthly basis, and then the owner's equivalent rent was up 0.4%. Now, this whole thing gives you an idea of just how cooked these numbers are in the first place. Owner's equivalent rent, the way they characterize this stuff, they could just, go out and say, what's a rent? How much did it increase? What's the average rent? And how much did the cost of a house increase, right? But instead, they do things like this owner's equivalent rent to determine housing prices, which is, they mention it in this article, actually. It's a hypothetical rent that a homeowner would pay for the same property that they currently live in. This is based on a survey that the BLS goes out and collects. So, this is all BS anyway. But nonetheless, it does inform what the Fed is going to be doing next. And today's inflation report does seem to have an impact on the Federal Reserve, or the anticipation perhaps of what the Federal Reserve will do next. Go over here to the CME FedWatch tool. You can see that right now, the probabilities of a rate hike, or rather a rate cut in September, have actually declined since yesterday. So this number right here, this is the odds of a 475 to 500 basis point target rate, that would represent a 50 basis point cut from where we are currently at. This number right here represents a 25 basis point cut. So markets are giving us two indicators here. The Fed is still basically locked in for a rate cut in September. I think that is baked into the cake at this point following the release of this data. However, investors seem to think that the odds of the deeper rate cut are diminished, and I think this is part of why we are seeing the sell-off in gold and silver today. You can see yesterday markets were factoring in a 53% increase of the steeper 50 basis point rate cut. So, again, this is the market looking at this data and thinking that the Fed actually is less likely to make the deeper cuts following this inflation data. The reality is that inflation is a lot worse than the CPI represents. And if the Federal Reserve was actually concerned about fighting inflation, they wouldn't be cutting into this environment. But they are, because the whole thing's going to fall apart if they don't. I mean, that's the bottom line. You've got, enormous debts, enormous deficits. You have tremendous amounts of leverage out there. Everybody from the federal government to the consumer to corporations has way more debt than they can ever pay off. And the only way to keep the massive cascading wave of defaults from permeating the system is to slash rates and get interest rates much lower so that people can start borrowing and spending again to goose this economy. Now, I think they should probably, honestly, for the sake of the economy, hike rates at this point, but there's no way they can do that. They would collapse the whole system. So they're going to err on the side of debasing the currency. Now, that being said, let's take a look at this chart. This is the gold to silver ratio. It's just a one-day chart here. You can see that it actually spiked up to almost as high as 90 today on the sell-off. Now, following the recovery that we saw later in the day, this bounce off the lows, which now seems to be retracing a little bit, but still we're still nicely off the lows in silver today. We've seen the gold to silver ratio come down, but I want to take a broader view of the gold to silver ratio and look at this chart. This is the silver price chart here going back to 2022, and there's several things I want to point out here that indicate to me that, today's sell-off is really just noise. Now, the reason I even really want to address today's sell-off is because the sentiment in the gold and silver market, but especially silver, is so low right now. I mean, I look at the comments on this channel, I read comments on relevant, channels on X. I'm pretty active over there. You can follow me at x.com/stacksmarter. And by the way, please do that, because if anything ever happens to this channel, gets brought down, I talk about something I'm not supposed to, that will likely serve as the backup, because X.com seems to be the only platform currently really promoting free speech. So that will be the backup to this channel. So follow me over there if you're on X. But let's take a look at this silver chart. So this purple rectangle that we see on the chart here, this represents an area of significant support for silver. If you go back to 2022, silver tested this level multiple times, couldn't break through it, finally broke through it in April of this year, then retested it, and then bounced off to the multi-year highs above $30. The last time that silver got this high as $32, more than a decade ago. So this was a significant breakout. But since then, we've seen a retracement. We've come back down to this level. Silver did bounce off of that. I mean, we're still higher than we were a couple days ago. It's important to remember that. But silver has been correcting in this kind of downward channel since July, actually since the end of June. And so right now, we're just kind of seeing noise. We're seeing churning in the precious metals market. Investors aren't sure which way the metals are going to break. There's sort of a holding pattern in anticipation of more easy money from the Federal Reserve. And this is the gold to silver ratio down here, this red line. Remember, gold to silver ratio, it tends to rise as the metals sell off, because silver almost always sells off faster than gold. So this is at a point of critical resistance right now, this ratio. It touched it on the sell-off a couple days ago. Now it's kind of retesting that. Assuming the gold to silver ratio can't penetrate this line, we're going to see silver break out of this downward trend channel and head to new higher highs, I think. Now, it all depends on what happens with the Federal Reserve at this point. I think that's going to be the main point of news. Also, geopolitical concerns are playing into this. But this purple box here, I think it's unlikely silver's going to drop below that. Now, if it does, look out below, right? The price of silver, we know it's very volatile. It could fall through that. If it does, it'll probably be a significant fall. I mean, to where, I don't know, maybe $24, maybe $20, $22. I think that would likely be accompanied by a broad stock market sell-off, though. I don't think silver's going to sell off in a vacuum. And more than likely right now, markets are getting ready to be pumped by the Federal Reserve. And I think it's going to be a lot more than just rate cuts. I think ultimately they're going to be returning to full-blown debt monetization, full-blown quantitative easing. Now, we'll talk about why in just a moment, but I mean, a lot of it just has to do with how big the deficits are right now and the fact that the geopolitical tensions indicate the debts are going to be rising a lot faster. So Dan Zworin in the chat here really it represents the culmination of silver sentiment at the moment. He just says silver sucks. And I mean, that seems to be the gist of the majority of the comments. Now, I know there's a lot of you watching who are smart stackers and who view pullbacks as, what they are. It's an opportunity to buy the world's most undervalued asset at a discount. That's what I tend to do when the price of silver falls, is buy more of it, because I'm convinced that ultimately the prices are going to be heading much higher. But when I see a lot of comments to the tune of, silver sucks, oh, silver's never going to perform, silver's the worst asset ever, I get a lot of people who tell me, I bought silver at, these very high prices. They usually will cite one of the peaks of the market, like in 2011. I bought silver at $50 and I've in the red ever since. It's like, well, look, nobody can solve the problem of, incredibly bad market timing. And if you did that, there's been a lot of opportunities to buy silver at a discount, dollar cost average lower, which is what I've been doing all along. And I also started this channel in 2017. Silver is up significantly since that time. It's up about 60%, I think, since I started the channel. But look, people have short memories, especially these days. I think there's a lot of TikTok brain out there. People have very short attention spans, and they just want to get rich overnight, right? They want to go buy a meme coin and watch it multiply 100x overnight. And when silver doesn't behave that way, they get really disappointed. Maybe they sell. I've seen some people mentioning on the comments on this channel and in X, saying that they're thinking of selling their silver and getting into gold at this point, because of course gold, has been performing very well. It's taking out all-time record high after record high. And look, I mean, if you're going to sell one asset for the other, I'm not giving any financial advice. I don't personally play the gold to silver ratio. I've never sold any gold or any silver myself. I just tend to accumulate the stuff because I view it as being very cheap right now. So, I prefer to buy things when they're cheap, sell them when they're expensive. But I mean, you couldn't pick a worse time to sell your gold, or rather to sell your silver and get into gold. You don't want to do that when the gold to silver ratio is peaking, which it is doing right now. If you wanted to sell your silver and buy gold, you should have done that back in May when the ratio was down around 72, right? Not when it's close to 90. But this is unfortunately one of the psychological traps that people get into. They buy their silver. Maybe they got very excited around, the $30 breakout, buying around 30 plus, 32. Now, I bought some silver up there. I'm not worried about that. But I think maybe people did that. They see it falling. They see gold hitting record all-time highs. They get disappointed and they sell maybe at a loss. That's a trap. I wouldn't fall into that. You got to keep in mind also, I mean, silver, even at this point right now, today, year over year, silver is up 21% compared to a year ago, right? And I can remember back in October specifically of last year when gold and silver were bottoming at the beginning of that month. I mean, I was sounding the alarm saying, this is a crazy opportunity to be able to buy this cheaply. And there was so much negative sentiment then. Tons of people were telling me back in October, silver is going to fall to $12 again. And I'm sure those people are, telling me today that silver is a terrible place to park your money. Never mind that, the dollar has lost like 25% of its purchasing power over the past 4 years. So maybe you're sticking around in paper assets, or, they'll cite perhaps the outperformance of tech or these other aspects of the market. And you don't want to go all in on physical silver. It doesn't have any yield. It just kind of sits there. But I personally, if I had to pick, the way I view it is I would rather be all in physical assets in this environment than all out of paper assets. Now, I'm not. I mean, I have a diversified portfolio. It includes maybe overweight physical precious metals because I think they're incredibly cheap. But yeah, you can get exposure to other areas of the market as well. I think that the Fed is likely to keep printing easy money, going to keep blowing up the asset bubbles that we're seeing in NASDAQ, seeing in the S&P 500. They're not bad places to put some money to work, certainly. But you got to understand the physical metal is like an insurance policy against systemic collapse, right? It's not a get-rich-quick scheme. And it's looking more and more likely that full-blown debt crisis, full-blown dollar debasement is in the cards. Now, it doesn't mean it's going to happen tomorrow, and we should all hope it doesn't, because it doesn't matter how big your stack of gold and silver is. When the bottom falls out of the debt market and out of the dollar, you're going to be wishing it hadn't, right? I mean, I don't think there's any amount of gold and silver that can really fully insulate you from what is coming, but it can help diminish some of the negative aspects of what is likely ahead. Now, I mean, gold tells us this, right? Gold is a safe haven asset. Gold is an inflation hedge. Gold has been taking out record all-time highs. It's also, a less speculative asset than silver. I will give it that. But at the same time, the benefit to silver is that it has, a huge amount of potential disproportionately compared to gold for gains. So, you can stack both. I mean, I do. I stack both gold and silver. I'm glad that I have some gold. I'm glad that I've been stacking both metals because gold has performed very well. Silver is still, doing pretty decently when you look at it year over year. But look at gold. I mean, a lot of people are going to see this sell-off today down to what, 24.46. This is the spot price, the current spot price of gold. They're going to freak out. They're going to panic. Say, oh, and I knew it. I knew that I shouldn't have gold. I knew I should just be sitting in dollars. With this little sell-off, zoom this out to the weekly chart. Just look at the weekly chart. Does that look like a bad chart to you? I mean, we're in the green on the week, right? Today's sell-off is just noise. Nothing to worry about, at least as far as I'm concerned. None of this is financial advice, So I'm just sharing with you my thoughts. And for those of you who do have an incredibly negative view of silver, of gold, of any of these things, look, I don't care if you stack gold or silver. You can stack Pop-Tarts for all I care. It means nothing to me. I'm just sharing information out there, right? I mean, what you do with your money, it's entirely up to you. So I'm going to keep stacking. The fact that there's so much negative sentiment out there right now for silver, and I don't mean to keep harping on this, but I mean, it seems to really be accelerating. I don't know if maybe I'm just attracting a lot of trolls in the comments lately, or if perhaps the stacking community is just really getting kind of negative on silver. But when I see all these comments negative about silver, it really kind of tells me that the bottom is in, right? Because at a certain point, there's nobody left to get negative. And if silver falls from $32 to $27 and all of a sudden the whole stacking community is turning very bearish on it, the negative sentiment is just through the roof, that means to me that we're getting ready to hit the next step up in the bull market. But again, silver's volatile. If you want something that's a little more stable, gold's where it's at. And gold, I think too, is set up here for new record all-time highs in the near future. I mean, it's been moving upward in this kind of consolidation pattern for months now. What's it going to take? Is it going to be the announcement that the Fed is cutting rates? Is it going to be some kind of false flag event that's going to drive safe haven assets through the roof? I don't know. But I do know that the technical chart for gold, is looking very strong. It's looking good for silver too. Let's talk about fundamentals. So here's some news. From today, the Biden administration has just approved the sale of $20 billion in weapons and aircraft to Israel. So you might see that and think, well, what's the big deal? I mean, we're selling it to them, right? American companies are going to get paid for it. No, the way this works is, Congress authorizes military aid. They print up fiat currency. They borrow it out of nowhere, send it over to our allies, and then our allies recycle that back into the military-industrial complex. So, Middle East on the verge of a major conflict right now. We're selling arms all around the world, sending large amounts of arms, $20 billion here, $20 billion there. Pretty soon starts to add up. The debt clock, $35.158 trillion. If you don't think inflation is going to persist when you see the people who are in charge of the monetary policy, and I know, the Fed is supposed to be independent, but I think we all know that that's not really how this system works. Those with the biggest debts are the ones who benefit the most from inflation. Think about that. the federal government has a vested interest in inflation continuing to remain high. If you owe $35 trillion in debt, you got $218 trillion in unfunded liabilities. Only way you can pay that stuff is in devalued currency. So if you're a debtor, then you benefit from inflation. If you're a saver, then you get eviscerated by inflation. That's just how it works, right? And despite the fact that gold is near $2,500 right now, I suspect that that's still very undervalued compared to how much inflation we've actually experienced. If you look at the real numbers, like go look at the shadow stats numbers or something, not the cooked CPI. I mean, that tells you that gold and silver both should be much, much higher right now. The fact that they're not, I don't know what you attribute that to. Normalcy bias, perhaps, on the part of investors, inflation, or rather manipulation on the part of the banks. Why haven't gold and silver really kept up with the real rate of inflation? You tell me. I mean, feel free to leave me a comment down below to let me know why you think that is. But ultimately, I think that gold and silver will be inflation hedges, and in the long run, they always are. That's why 4 silver quarters used to be worth $1, and today they're worth $20. It's because gold and silver are actually inflation hedges. Now, do they move perfectly in lockstep with inflation? No, they don't, obviously. And again, I feel free to speculate in the comments about why that is. I think it's a combination of normalcy bias on the part of investors who just view, the official numbers as sacrosanct. They think that we've got the strongest economy in the world. They think maybe whichever side they're on, if their candidate wins in November, that the inflation situation is going to be fixed. I mean, never mind that both candidates who are on the ballot have had a shot at this, and neither of them was able to, fix this situation. And that's likely because this is all, going according to plan. This is the plan. It's debasement of the currency, massive inflation, sending money to the wealthiest in society, eviscerating the middle class. That's the plan. And one of the ways that we can protect ourselves is to get into hard assets like gold and silver. I'm not saying it's the only way. I'm not saying you have to do that, but that is, I view, one of the best methods to protect yourself from the end game of this system. Because what we're really stacking gold and silver for. Yes, it's nice when they move up on paper, I guess. If you've got miners or you've got some derivatives or something that you're trading in a trading account, it's nice when the gold and silver price goes up. You can make some paper profits. But the real reason that we stack the physical silver coins, silver bars, gold coins, is because this is inevitable. The collapse of this system, right? This is an unsustainable system, borrowing more money than can ever be paid back. At the end of the day, this is all going to have to be monetized by the buyer and lender of last resort, the Federal Reserve. Thank you, Stacking Surfer. It's $1.99 for a silver dime. Yes, sir. Thank you so much. I'll be stacking with that super chat, so appreciate that. You know what I'm talking about, Stacking Surfer. And I know a lot of you out there get it. I don't mean to harp like I was earlier on the negative sentiment. It can be a little tough to go through the comments, honestly, sometimes, because I love to communicate with those of you who kind of get it. And look, I don't mind open debate, but there's a lot of trolls out there too, and a lot of people, I think, who just have a very disillusioned, upset mindset surrounding silver. And I get it. Look, it can be exhausting, I guess, seeing the silver market just kind of, yes, it's up year over year, but it's true that it hasn't kept up with inflation. You see inflation surging. You wonder, why isn't the silver price higher? But the right view on that, I think, in light of, this number, the enormous U.S. national debt, is that we should be thankful for pullbacks in the price of silver so we can get more of it. And that's what I'm continuing to do. Also in the news today, another reason why you might want to consider having some physical assets, regardless of their price, outside of the financial system. Today we see that the Iranian central bank and banking system has been hit by a major cyber attack, reportedly one of the largest in history. This is from I-24 News. The central bank, this is being reported, by the way, by the Saudi-affiliated Iran International. That is where this story originates. But, the central bank and other banks in Iran as well being hit with what is being described as one of the largest hacks in the country's history. Hackers stole information belonging to account holders. I believe there's also a DDoS type attack going on, disruptions to these systems. So look, this, for one thing, could be the prelude to larger, conflict, right? Cyber attacks could be the thing that is the prelude to a kinetic conflict. Certainly, we are on the brink of that in the Middle East, it seems, and have been for some time now. Eventually, I think my view is that a spark will likely ignite this powder keg because of the dangerous game of brinkmanship being played there between Iran and their axis of resistance, as they describe themselves, or they've been described, and the U.S. and its allies in the region. But also, there's no guarantee that the U.S. financial system is safe from this type of attack, right? Especially given the fact that our adversaries now are coming under a major hack, could be retaliation at any moment, right? So very important to keep in mind that anything you have that is just represented by a digit in a computer, it can just poof, be gone in a heartbeat. We saw that with the market crash that we had recently, where brokerages, you couldn't log in, right? So you had a huge drop in markets, couldn't log into the markets, or you couldn't log into your brokerage accounts because of some kind of glitch or cyber issue. Look, again, I'm not saying you need to have all your assets in physical gold and silver. Obviously, that's not the case. I don't give financial advice, but if I did, I wouldn't tell anybody to go all in on gold and silver. But having some physical assets that are outside of the financial system that are immune to cyber attack, right? I mean, you can't hack your gold and silver. There's a cyber attack. You're going to go look in your, buried cash in the woods or in your safe or whatever. I mean, your segregated storage with SD bullion, if you want to go that rate. I mean, there's all sorts of ways you can store your gold and silver outside of the financial system, but it's not going anywhere, right? In the event of a cyber attack, whereas your, fiat ones and zeros in a computer, who knows? Thank you, everybody in the chat. I see a lot of thumbs up, a lot of support today in the chat. I always appreciate everybody who tunes into these live streams and these videos. Do me a favor, if you're watching still, if you stuck around this long, I'm assuming you got some value from this video. Smash the like button down below. Share the video on social media. Tell your friends. People need to be aware of the risks to fiat currency and to the opportunities that exist in the physical bullion market. I really do think that having some of this stuff on hand will prove highly beneficial in the coming months, weeks, years. I don't know when we're going to face a time when you need to have some physical bullion, but I mean, it could be tomorrow, right? Anyway, okay, here's an interesting... I'll take any questions that anybody has in the chat, by the way, before we wrap this up. As Julia Stryker just posted a good one. How will people know what gold and silver are worth if the electricity went out and there wasn't a constant spot price listed? Well, yeah, that's an interesting question, I guess, with this generation entirely dependent on constant information access. But I mean, listen, people have been trading with gold and silver for thousands of years, right? Thousands of years. What percentage of time have people had electricity that people were using gold and silver? A very low amount of time. I mean, it's the way that people always come up with in exchange. It's whatever one person is willing to sell it for and whatever one person is willing to buy it for. I mean, that's how markets work, right? So I don't know exactly what gold and silver will be worth in the event that there's no electricity. But I guarantee you that if, say the grid goes down, just hypothetically, and there's no electricity, if you go to a farmer in your area or a rancher, somebody who has vegetables, somebody who has meat, somebody who has grain, who produces the stuff, if you go to them in that scenario and you've got a bunch of dollar bills versus some gold or silver coins, I mean, I think it's pretty clear in a grid down scenario which one they're probably going to have more confidence in. I don't think I know any. Well, to be fair, I don't really know too many ranchers or farmers in my area, but I do know a few people who engage in that sort of activity. And I mean, they'd probably take gold and silver right now if you offered it to them. And certainly under those conditions, I don't know what they would give you for gold and silver. It's whatever the market will bear, I guess. But I do think that you would be able to spend your gold and silver without much of an issue. Now, OC Stacker says, if you cannot afford gold, stock up on food, another form of barter. Yeah, absolutely. having some freeze-dried food in your pantry, probably not a bad idea. Having some bags of rice and beans, with the desiccants and oxygen absorbers in there. And not only can you barter with food, but you can always eat it. In fact, I think that that's a good idea to have some, food on hand, not only so you can perhaps trade with it and eat it and all these things, but so that you don't end up being like a weak hand with your gold, right? Because, if there's food shortages or something, it's not that the value of your gold and silver are going to go down, but it's that food could get very expensive. You don't want to be forced to, trade your gold and silver away for a, low valuation against food just because you're starving. So, it probably behoove you to have some food on hand as well. Let's see. Gary Nelson says all markets are somewhat manipulated, but the power of value supersedes over time. Yeah, I think that there is a lot of manipulation that goes on in markets, but all you have to think about is, going back to the Federal Reserve. I mean, all eyes are on what they're going to do with interest rates right now. Think about this. The Fed sets base interest rates. They set the federal funds rate. They can also manipulate interest rates by buying and selling debt, something they've been doing, in quite a large amount since 2008. And, interest rates are the price of money. Money is half of every single exchange in the economy. So obviously these markets are all manipulated. I mean, every market you go to is manipulated if you're paying with dollars because it's a heavily manipulated currency. Central banks don't allow a market rate of interest to be determined between buyers and lenders. They, in their attempts to exert their control over the markets and all of their hubris, thinking that they know better than the free market where the interest rate should be, they manipulate everything. So, that's a fact. All markets are certainly manipulated. And as far as gold and silver manipulation, look, if they are manipulating gold and silver to the downside, which we know they do. I mean, JP Morgan has paid a huge amount of fines for painting the tape and gold and silver for rigging the market. Ultimately, that's going to be an unsustainable practice. One of the things we've witnessed in gold and silver over the past several years, especially silver, there's a major supply deficit. It's not to say there's a shortage. Anytime I mention this, I get all these comments saying there's no shortage in silver. Yeah, that's true. There's silver available right now, but there's less and less every year because it's not being replaced by the silver that is coming out of the ground, right? More is being consumed. I think this year it's going to be more than 200 million ounces, according to the Silver Institute, that gets consumed that doesn't get replaced. So that is a consequence of a artificially low silver price, right? You need an incentive for producers to get out there and dig that stuff out of the ground. You need higher silver prices to encourage that. And ultimately, if, say, they just keep the price of silver suppressed on a very long term, you're going to run out of this stuff. And then you're going to see the price explode. And you might see a collapse of paper markets that are used to manipulate it, in the terms of there's like 100 to 200 ounces conservatively of paper silver that gets traded for every underlying ounce. The end game for long-term manipulation is that there won't be enough silver and you'll see the price of actual physical metal just skyrocket and paper markets won't mean anything. That's if, prices are being artificially suppressed. I don't view every downtick in gold and silver as manipulation, although it does happen from time to time. And certainly there are players out there that, use fiat currency and paper contracts to alter the price. But anyway, that's pretty much it for today, everybody. I do appreciate the comments, the questions in the chat. It's always fun. I mean, feel free to leave a comment down below if you're watching this later. I do tend to read through the comments, so if you want me to answer a question or you just want to leave a comment for me, I will see it. But do me a favor, smash the like button, subscribe to the channel. Stay safe and happy stacking, everybody. I will catch you next time. Smart Silver Stacker, out.